order entry checklist. So creating an order entry checklist can be a great way to confirm that you have the correct trade and risk amount that you wish to open or close. The more you continue to do this checklist, the more it will start to become second nature as you take action on a trade. So for myself, the first thing that I like to do whenever I'm going through the checklist to make sure everything's correct is, first of all, make sure I have the correct strikes. Or strike, right? So let's say, for example, I wanted a 0.7 delta, but all of a sudden I've accidentally clicked on an out of the money strike for a long call, right? So that way I could go in there, adjust that, and make sure it's the correct strike I'm looking at. Or let's say I was looking at a 10-point debit spread to open, and I look back at the strike increment and realize I have on a 20-point spread instead of a 10-point spread because I didn't click on one of the correct strikes. So this is, to me, important as the first step, because then it's going to adjust everything else to make sure that's correct too, typically. So when you're checking those strikes, you also want to double check that they're not strikes that you may already hold. This is also important, right? Let's say you already have a, 3,000 call out there in SPX, and all of a sudden you're trying to put on a butterfly with a 3,000 pin for the same expiration. Well, that's going to close out of your long strike rather than selling to open new strikes there, which is going to completely change your risk tolerance for that amount and also close out of a trade that you might not want to have closed out of. So that's another thing that's important, is make sure it's not already a trade that you hold. Or let's say that you bought to open the 3,000 and 3,000 is actually a wing on one of your butterflies, so you're buying to open it again. Well, that can accidentally cost average the trade. Now, that to me isn't as big of a deal. But if you got into, let's say, this 3,000 call for this month 5 months ago, and now you're getting in today, well, that's going to be a huge difference in cost basis to where you need to understand, if that ends up happening for your account, you need to understand what is the first to close. Is it the first to close of the contracts or the last to close? And you can usually call in with your brokerage platform to confirm that. But let's say it's the first to close and you're looking to close out of that butterfly rather than the long call. Well, then that's going to completely be a different profit or loss for your account. And in turn, that's just something important to know, or to even ask if they could do it the opposite. So that way you're closing out of the correct strike and price of that strike on the correct trade, right? So to me, unless it's a management action that I'm taking where I'm literally looking to cost average the trade, I typically try and avoid using the same strike if I'm already in a trade at that level and looking to put on something else around that level as well, right? I'll either try and go from the call to the put side if that's possible, if it's something like a butterfly. Otherwise, I'll just look at rearranging my strikes so that they're not already in something that I already hold. So once you do those two things, the next step for me is to confirm that you have the correct expiration. This too can also greatly change the cost and also the theta decay on a trade, right? So let's say you meant to go with a long call, but you're going with this month's expiration. Well, this month's expiration only has, to the end of this week until it expires, right? So you have about 4 trading days from today. That wouldn't make sense on a long call unless, maybe you're looking at a run into earnings or something like that and it was prior. The earnings announcement was prior to this week's expiration. Otherwise, right, for myself personally, my rule for a long call is typically to try and go out at least 30 days in time. So for myself, that would be a big no-no. I would definitely want to change that expiration to go further out. And that, of course, is going to change the cost basis, right? A monthly, let's just go to ATVI, for example. Right? This month expiration for the 60 call is about $1.94 cost basis. For the May monthly, which is probably what I'd prefer, the 60 call is now a $3.92 cost basis. So that changes your capital cost immensely and therefore might end up changing your contract amount later. So making sure you have the right expiration is an important, top step to look at, I would say, on your order entry checklist. So those to me are the top 3 things, right? First of all, confirming your strikes, confirming the correct expiration, and making sure it's on a strike that you already hold so you're not accidentally closing it out or opening it up or cost averaging or anything like that, right? Making sure that it's the correct order and it's not going to harm any of your other current trades that you might have open. The next thing that you want to do is once you confirm the correct expiration and strikes, you want to double check that the strike is paired with the correct buy to open or close / sell to open or close. So, right, just as we talked about, if let's say I was going to go out and close out of my Kroger trade, right? Let me just pull this up here. So we have the May monthly, and I'm not doing this. I still like Kroger. But we have the May monthly 30 call, and let's say I wanted to close it out. Well, if this was my order ticket, I'm actually buying to open another contract of this trade. So I would want to go ahead, change that, and make sure it says sell to close. That way I know I'm closing out of the trade rather than opening another contract. Or let's say, once again, I accidentally got in to the wrong strike. I was just clicking around quickly. Maybe I made a fat thumb move on my phone or something like that. Well, once again, by checking this, now you should have technically already checked that the strike was correct, but let's say you somehow missed that. Well, this is a good second check of that to make sure you're taking the proper action. If I saw sell to open and I was meaning to close a trade, that means for some reason I didn't click the correct strike, right? And for some reason I missed over it the first time in the checklist. So that way I could go ahead and adjust that to make sure that it properly fits. So that's also important, right? Because you don't want to accidentally open strikes that you're not meaning to, or cost averaging a trade when you're meaning to close it out. So once you do that, you look that you have the correct contract amount, right? That, of course, is also going to change your complete risk on a trade. Sometimes brokerage accounts will have it automatically set to 1 contract or 10 contracts. So by double checking that amount, it's always a good idea to make sure that you have the correct risk amount for your account as well as for the individual trade. So for example, in my Thinkorswim account currently, let me just delete this really quick. This is an account where I don't usually trade out of it. I just have $1,000 in there right now. It's more for the chart settings. I'm actually planning to start a challenge account here with it to see how quickly I could grow the account, only risking $500 of it. But let's say, for example, I wanted to get into Kroger in this account, right? I still like it to the upside. Let's say I wanted to jump in here and I jump into the 30 call. Well, you can see here when I click buy to open, it's automatically set for 10 contracts. As I mentioned, in this account, I only have $1,000 capital. So if I went to click confirm and send, I can see here that this already is well over my cash buying power, right? Because it's 10 contracts instead of 1. And Tastyworks, you can easily see this up here, right, on the max loss. So if I had 10 contracts of this, well, that's a max loss of 8,880. And of course, if I'm selling to close this strike right now in Tastyworks, well, that's not the same contract amount that I have. So it means it probably won't go through. But if for some reason it did, it means it's closing out of one and then selling to open the rest, right? Now, as I mentioned, more than likely that trade wouldn't go through. There would be an error on it. But this is a good reason why you want to check that your contract amount is correct. So let's say we go back down to 1 and then try it again. And of course, I'd go at the mid. Now that makes sense for my account, right? Now that's the correct cash buying power I'm looking at for the contract amount, and it's right in the risk tolerance that I was looking for this trade. So making sure your contract amount is correct. Oh, not done yet. There we go. So after you double check the contract amount, you want to double check the risk versus reward as well as the total amount of the cash buying power the trade will take away from your account total. So once again, kind of with the contract amount, especially on both Thinkorswim and Tastyworks, when you go to the confirm and send, it usually brings up an extra box where you'll double check everything. But once again, this confirms that I have the right capital amount coming out of the trade, right? That my cash buying power in my total account is taking out this much of it, leaving me $780 for this account if I were to execute this trade in here. So over in Tastyworks, it of course has that check here, but I like Tastyworks because it gives it to you even before you have to click review and send, right? So if we were closing out of this trade, which once again, I don't plan to in this account, but we can see that the cash buying power would then be a credit to my account, right? Because it'd be bringing that capital back into it. So let me keep going here. So after you do that, you want to confirm the entry price is where you want to start to work the trade order to fill. Now, if this is a day order that you're maybe wanting to fill immediately, right? You don't want it just sitting out there. It's not like a target trade or a good till cancel. I typically look to start at the midpoint, or on Thinkorswim, it's called the mark. And that's basically the midpoint between the bid and the ask. So that's where I'll always start a trade, whether it's opening it, whether it's closing it, whether it's for a credit or debit. I try and start at that midpoint. Oftentimes I will end up getting a fill there. But if I don't get a fill immediately, typically that's where I work the order from. And the reason why is, let's say I was doing something, especially with a slight wider width, like SPX, for example. And it was a this week AM expiration. Well, you can see here that it's about $1 width between these strikes. So if I'm getting filled 50 cents off of the bid or 50 cents off the ask, that to me means I'm saving a little bit of money there. Now, if it's, like I said, a trade that I really like that I'm trying to jump into, I won't let it sit out there. I'll continue to try and work the order. At the same time, if it's, a good till cancel order, then I might actually set this at something, say this was a closing order, for a credit or something, and I'm buying to close it, but I might set it at something like this. Make sure this is set as a good till cancel, which we'll talk about in a second. So that way the order can sit out there for a while. So you don't have to always start at the midpoint, but typically if it's a trade I'm trying to fill immediately, I certainly do. So once that happens, I also double check that the order type is correct, whether it's a net debit or net credit for the trade itself. So here, for example, you can see on Tastyworks it says order type, and that's because this is a long right now, but let's say this was a spread. Well, here you can see the order type is a net debit. This confirms I'm in a debit spread. So let's say I wanted this to be a credit spread, right? And I saw this at net debit. That means, once again, it's another double check, but it's saying, hey, your buy to open and your sell to open aren't correct. You need to flip those around to make sure that it's paired properly, right? Or let's say this was a profit recycling trade that I was closing out of, for example, where I'm technically in it for a net credit, but I also want to make sure I close out of it for a net credit too. Let's say I'm closing the order early. Well, once again, this is for a debit, right? So if I saw this, I'd be like, oh, I'm accidentally opening these strikes. Oops. Let me go ahead and change that around because I know I should be closing out of this trade for a net credit, and see it changes there. So that way I know it's the correct strikes. So making sure that's correct. Also make sure that the time in force, or the TIF, that's what it typically says on your brokerage platform. Here you can see the TIF is right there. Here, once again, TIF, and that just means time in force. How long is the trade out there for it to be executed, right? So typically, for myself, I usually only do day orders, or I use good till cancel orders, right? If it's me closing out a trade, maybe I don't mind taking a profit today, but the chart still looks really good. Like on Kroger, for example, then I might hold it out there a little bit longer and just remain patient for the day if it fills, and if not, then I'll continue to hold it. Or let's say it's a target I have in mind. I expect Kroger to get up to a certain level. Therefore, I'm looking to take a particular profit target of that expected move. And so I've set my good till cancel, let's say, for $10. And so I just want to leave it out there. And basically that means that unless I cancel out of that order, the order will sit there at $10 until expiration occurs, right? So either it will get filled at $10 or it will just sit out there until expiration, and then I'll need to take action closer to that date unless it's out of the money and I'm just letting it expire worthless. So, making sure your TIF is correct for the order type that you're looking at. So once you've confirmed that everything is correct on this checklist, you are ready to place the order. And like I said, oftentimes, both on Tastyworks and Thinkorswim, when you click confirm and send, it gives you this extra pop-up box just to confirm the details if you want it to do so one more time, right? So that's, of course, the benefit is they really want you to double check as well, make sure you're putting on the correct trade. You're not just, accidentally jumping into something that you're not meaning to. And this, of course, a lot of these later on kind of double check those first few points in the checklist, which is why, to me, those are the most important, because if those first 3 points are starting to be correct, it allows for the other things to be correct too as you're going down the list. But overall, you can see that you have backups, right? So let's say I had the strikes correct, but I accidentally set it up as a credit spread instead of a debit spread. Well, then let me go back. So then, first of all, step 4 should help confirm that the buy to open and sell to open is correct on the strikes. But if for some reason I looked over that, then the correct net debit, net credit for the trade should also confirm that as well. So I hope that was pretty self-explanatory, I think. I don't know if there will be any questions around that, but that is what you do, or at least that's what I do whenever I go through my order entry checklist. If I have those things confirmed, then I know the trade is good to go. And like I said, it seems like a lot, but the more that you do it, the more it just becomes second nature to you. So you can look at things quickly and say, okay, yep, all that looks good, it's checking out, go ahead and place the order. And it happens just within a few seconds. So I know it took us a while to go through the list, but when you're actually doing the steps, it doesn't usually take that long to confirm.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me over.